Welcome to Trade Pro. In this video, I'll explain a profitable 5-minute scalping strategy, show some examples for it, and then test it 100 trades in a row and show all the results at the end of the video. A quick shout out for my affiliate links down in the description. We have Capitalize.ai, Bybit, and also my Patreon page where you can learn my personal trading strategy and access custom indicators and trading scripts. Now let's talk about this strategy before getting into the 100 tests. All right, so let's cover the indicator setup. The first indicator is the MACD with some changed settings. Well, just style actually. The settings are default, but I've gotten rid of the MACD line and the histogram. I've also changed the style for the zero line and keeping the signal line. Inputs are all default at 12, 26, close 9, and EMA. So we have this at a default setting on the inputs, but I just changed the style and got rid of what I'm not going to be using. Then we have the Stochastic RSI, which has default settings. Everything is default on the Stochastic RSI for trading view. So if you type in MACD, we have the moving average convergence divergence, and then also if you type in stochastic, and then we have stochastic RSI right here. So it's just trading view default. Now let's talk about the rules for the strategy and how these indicators are going to be used to get good entries for trades. All right, let's talk about exactly what the entry criteria is, as well as where the stop loss and take profit target will be placed. So for the MACD, this will be used as a trend direction filter, which means when the orange line or the signal line is below the zero line, which is the white line, that's considered a downtrend. You can only look for short positions when this is in a downtrend. So orange line below white line, only looking for shorts. Orange line over white line, only looking for long trades. Now, the stochastic RSI, what we'll need to see first for an entry in a downtrend specifically is an overbought cross to the downside. So stochastic RSI comes over the 80 line and then crosses down in the overbought territory. Once that has happened, which happens right here, then you're going to be looking for price to sweep the high before that cross down began. So what you'll be doing is in a downtrend, looking for price to take out the high before that stochastic RSI cross down. So sweeping the high and then looking for a continuation move of that downtrend. The entry price will be that sweep of the high before that first cross down on stochastic RSI. So trying to get a discounted entry within the context of a downtrend, which is determined by the MACD and the signal line being below the zero line. That is the entry criteria. Now first, the take profit target, going to be targeting the lows before that pullback began. And then for the stop loss, it's going to be just using a 1 to 1.5 risk to reward ratio. So that will change depending on where the profit target is, but essentially place your profit target at the low before the pullback and then using a 1 to 1.5 risk to reward ratio, that's going to be determining the stop loss. So I'll go through a few short entries as well as long entries so it all makes sense before getting into the 100 tests. Now here's the trade that happened just before the one I just showed, and as we can see, again, MACD, we have it signaling a downtrend because the signal line is below the zero line. So then we look to the stochastic RSI to cross down in the overbought territory, which happens right here. So we can see it happens right here in this area. So what you can do is then target where the high was before that cross down. So where this purple line is, once price sweeps up and takes out that high, that will be the entry price into the short position. And then again, targeting the low before this pullback began and using a 1 to 1.5 risk to reward ratio. That is the trade setup. So let's move on to a couple long setups and so it all makes sense. Okay, so here's an example for a long trade. So first we see that the signal line is over the zero line, which tells us we're only looking for long trades. Then we see a cross up on stochastic RSI that happens in the oversold territory below the zero line. So we have two criteria met. That cross up coincides with this area right here. So we'll be looking to the price, looking for it to sweep the low before that cross up occurred. So right here on this red candle, we have the entry. So that would be a long entry right as the lows are swept there. The target will be the high before that pullback began. and then using a 1 to 1.5 risk to reward ratio to place the stop loss. This one ends up taking out the highs before the pullback began and being a winning trade. And we can see that the signal line does go below the zero line temporarily here, but the entry still has the signal line over the zero line, so it's still a valid entry there. Okay, so final trade example, another long entry. We see that the signal line is over the zero line, so we're only looking for a long trade. This is an uptrend as determined by the MACD. Then stochastic RSI comes into the oversold territory and crosses up right here in this area. So we'll be looking for the low to be swept before that cross up, and that does occur, which will give us our long entry right in this area, and targeting the high before that pullback began using a 1 to 1.5 risk to reward ratio. That is going to be the trade setup, which eventually does end up hitting that profit target. So that will cover the strategy itself, what I'll be testing 100 times. So let's see how it performs. I'll go into the 100 test now and show the results at the end. All right, results are in after the 100 back-tested trades. This was tested on Euro against the US dollar on a 5-minute time frame using a 1 to 1.5 risk to reward ratio. It took 1 month of price data to find the 100 trades, so a relatively small amount of time. And out of those 100 trades, there were 52 winning trades and 48 losing trades. The most wins in a row was 5 and the most lost in a row was 7. The gain on the account figure ended up being 30% if you're risking 1% of account equity per trade and not compounding the gains. So this one actually did quite well. For a 1 to 1.5 risk to reward ratio, a 52% win rate is decent and quite good. I'll put it on the strategy ranking spreadsheet, of course, so we can compare it to other tests using the similar setup with a 1 to 1.5 risk to reward ratio. And as I always say, this is not the end all be all the way that I show it. It can easily be improved using better trade management practices, so moving the stop loss to break even or taking partial profits, maybe using a different risk to reward ratio, things like that to manage the trade in a more effective way. So let's put it on to the strategy ranking spreadsheet and see how it stacks up against the other tests. All right, so here it is on the strategy ranking spreadsheet, falling at spot number 45 out of the 92 strategies tested so far on the channel. So this one falling in that mid-range and doing quite well. So considering it only took 1 month of price data to find the 100 back-tested trades, this one did produce some decent returns at 30% gain on the account. We can look at a couple others with slightly better results, but that took a lot longer to get the 100 trades. So we have 1 to 1.5 risk to reward ratio here, 1 to 1.5 risk to reward ratio here, and also here. These were done on higher time frames and they only had a 1% higher win rate. So every sample of price data, you're going to get a slightly different result. So this is basically the same as any of these up here as well. If we go higher on the list, most of the highest winning ones are using a 1 to 2 risk to reward ratio. We do have this one here using a 1 to 1.5 that performed really well and only took 40 days. So this one perhaps being better, although it could have been just a better sample of price data. So it's hard to say whether or not this one is any worse or better than any of these other tests using the same risk to reward ratio. But this one did do quite well and does give frequent trade signals, so over 3 per day, so 3 or 4 trades per day with this strategy on just the one pair Euro against USD alone. So this one, again, can be improved. Trade management practice, test out different things, and try and improve the strategy. These are just basic tests to kind of give you guys ideas about designing strategies. So that's going to cover it for this video, and thank you guys for watching. If you haven't, subscribe, like the video, comment down below for the YouTube algorithm. Check out my links in the description for the affiliate links and my Patreon page. Now, have a nice day. Thank you.